Hello everyone. American regulators have launched investigations into the activities of bankrupt Singaporean hedge fund Three Arrows Capital, 3AC, with the Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, seeking to identify the reasons and responsible persons behind the crypto-focused firm's collapse. As part of their activities, the two U.S. agencies are now working to determine whether Three Arrows Capital violated rules by misleading its investors about the contents of its balance sheet and not registering with the regulators, two persons familiar with the matter told Bloomberg. The two agencies are yet to release official confirmations of their respective investigations into the hedge fund and its financial woes. As part of the company's bankruptcy proceedings, earlier this month, a number of non-fungible tokens, NFTs, collected by Starry Night Capital, an NFT fund set up by 3AC, were moved to a new wallet by Teneo, the consultancy leading the hedge fund's bankruptcy proceedings. In June 2022, the Monetary Authority of Singapore, MAS, reprimanded the hedge fund for providing false information to the regulator and exceeding the assets under management (AUM) threshold that is allowed for a registered fund management company (RFMC) under the nation's law. The agency said it has been investigating the business since last year. The reprimand relates to contraventions by TAC which occurred prior to its notification to MAS in April 2022. MAS has been investigating these contraventions since June 2021, the Singaporean regulator said in a statement. In light of recent developments which call into question the solvency of the fund managed by TAC, MAS is assessing if there were further breaches by TAC of MAS regulations. Last July, the Singapore-based business filed for bankruptcy, declaring its business had collapsed in the wake of extreme fluctuations in cryptocurrency markets. Among others, 3AC reported major losses as a result of the collapse of the Terra USD stablecoin in May 2022. In August 2022, the fund's liquidators obtained the permission of a Singaporean court to gain access to key records, obtaining more information about the assets of the collapsed firm. Three Arrows is estimated to owe its creditors more than $2.8 billion in unsecured claims. 3AC's two co-founders, Su Zhu and Kyle Davies, have made efforts to stay under the radar since their company's bankruptcy. Despite this, Zhu was found to be trying to sell a house he bought in Singapore last year for about SGD 48.8 million, $34.3 million. The exploiter of Solana-based DeFi lending platform Mango Markets has revealed his identity, referring to his actions as a highly profitable trading strategy. Avram Eisenberg, who calls himself a digital art dealer, has revealed that he was behind the $100 million exploit that hit Mango Markets earlier last week. "I was involved with a team that operated a highly profitable trading strategy last week," he said in a Saturday tweet. In his admission, Eisenberg argued that their actions were legal open market actions, using the protocol as designed, even if the development team did not fully anticipate all the consequences of setting parameters the way they are. However, as a result of the exploit, Mango Markets became insolvent, Eisenberg noted, adding that the insurance fund was also insufficient to cover all liquidations. This led to the loss of over $100 million in user funds. To remedy the situation, I helped negotiate a settlement agreement with the insurance fund with the goal of making all users whole as soon as possible as well as recapitalizing the exchange, he said. Eisenberg compared the process to how auto-deleveraging works on exchanges, which is a risk management mechanism used when a position is closed with negative equity and claws back some profits from profitable traders in order to ensure all users' funds are protected. Mango Markets is a decentralized exchange, DEX, on the Solana blockchain. MNGO, the protocol's governance token, is a relatively little-known token with a market capitalization of just over $26.8 million. How Eisenberg stole $100 million from Mango Markets. As reported, the exploiter funded an account with the stablecoin USDC, and later took what was described as an outsized position on the Mango token perpetual futures market, MNGO perp. Within a few minutes, the price of the MNGO rose by 5x to 10x on a number on external exchanges, which Mango's price oracles used as its reference for the MNGO per price. The increased unrealized profit on the account then meant that the same user could borrow and withdraw approximately $100 million worth of BTC, USDT, SOL, MSOL, and USDC, the team said. At the time, the Mango team revealed that they plan to seek a solution directly with the group behind the exploit. We believe the most constructive way to approach this is to continue communicating with those responsible for the incident, they said. Notably, Eisenberg was previously accused of stealing treasury funds from Fortress DAO, a fork of Olympus DAO running on the Avalanche blockchain, where he was a lead developer. The developers behind the remnants of the fallen Terra, Luna, network have unveiled an ecosystem funding program worth some $95,248 million, seeking to encourage developers, miners, and users to develop the troubled ecosystem. This program will be funded with the 9.5% of the total Luna supply that was earmarked at the launch of the new Terra chain. This incentive program will run for 4 years and will be managed by a community-elected committee that will be evaluated every 12 months, according to the proposal. Under the plan, the project will consist of 4 initiatives: a developer grants program of Luna 20 million, a developer mining program comprising Luna 20 million, a liquidity incentive mining program covering Luna 50 million over a 4-year period, and a user incentive program of Luna 5 million, the proposal states. The Terra Expedition is a revised iteration of the Developer Mining Program and Developer Alignment Program initially defined at the launch of the Terra blockchain. The original proposal suggested that 9.5% of the total Luna supply be distributed based on TVL, but given the current state of the Terra ecosystem, TVL-based allocation would mainly benefit a few protocols and would not have the intended effect of kickstarting the Terra ecosystem, Terra said. This revised proposal aims to better align incentives across the ecosystem and focus on attracting developers, onboarding users, and promoting deep liquidity, according to the statement. It is noteworthy that Terra Luna Classic has established itself as one of the most traded crypto assets in the market in the past weeks, with the token's trading volume reaching $400 million regularly. Major exchange Binance has played an important role in Lunk's spiking volume after its CEO Changpeng CZ Zhao announced a Terra Luna Classic token burn undertaking on September 26. Terra Luna Classic's token burn, scheduled to start every Tuesday, got rid of 5.5 billion LUNC tokens in the week that ended October 3. A further 2.9 billion LUNC were burned in the week that started on October 4 and ended on October 10. Hello everyone. Welcome to Blockchain News. The authorities of China's Hong Kong Special Administrative Region are expected to present a policy statement on the development of the city's digital assets market at the forthcoming Hong Kong FinTech Week event. The policy statement will make our policy stance on virtual assets clear to the global markets. It will also demonstrate our commitment and determination to explore financial innovations together with the global virtual assets community, Hong Kong Secretary for Financial Services and the Treasury Christopher Hui Qingyu told local paper China Daily. The conference is scheduled to be held between October 31 and November 1, hosting a number of debates between local government officials, executives, and industry observers, as indicated by the event's agenda. More than 500 representatives of financial institutions from across the world, and more than 200 speakers from China and overseas, will be attending, according to Hui. The latest announcement comes as cryptocurrency investors are increasingly worried about Hong Kong's regulatory ambiguity on crypto. The city's lawmakers are advancing plans to require licensing for crypto trading platforms through an amendment to Hong Kong's anti-money laundering legislation. Such a change would require companies to offer such services exclusively to professional investors with a portfolio of at least 8 million Hong Kong dollars, $1 million US. Should it go through, the decision could discourage numerous crypto investors from carrying out their business in Hong Kong.